Sam Vitus on the floor of the New York Stock Exchange. It's time now for overlooked stocks. So shares of Jabil are on the rise after a strong earnings report this morning. So I'm joined by George Tsilis, Senior Markets Correspondent, to help us get across this one. So we got some earnings today, and that is at least helping the stock outperform what is otherwise a down market. Talk us through the report and the reaction we're seeing today.
Yeah, actually, quite good considering the market drain that we're seeing across the board, especially in the technology stack. But Jabil, certainly an overlooked stock. It's an interesting company with a very well-diversified end user market base. They are essentially one of the leaders globally. It's a Singapore company that is in the electronic design and manufacturing space. So they essentially have diversified end markets for printed circuit boards and design for industry across multiple sectors. Manufacturing. They also have an automotive business, but they're also moving pretty aggressively in intelligent infrastructure, and that includes cloud and networking, of course, capital equipment space, as well as data centers. And this has been a huge catalyst for the business. They actually had a mobility business that they spun off back in 2023, but even since that spin-off, top-line sales have been gradually increasing for the business, and this year the stock is higher by about 60% on a gradual basis, considering their evolution, like I said, into the intelligent infrastructure space. But nonetheless, if you look at the report, it was actually quite good. The EPS came in around $2.85. That was higher by 42% compared to last year at $2 a share. Revenue also came in ahead of estimates at 19%. So again, you're seeing basically 2 times EPS to sales growth for the quarter at $8.31 billion versus $7 billion last year. But also the guidance. So they slightly increased the midpoint guidance for next quarter's run rate. It looks like the EPS moved by about a dime to $2.47 versus $2.37, as well as, of course, top-line sales estimates rising by a hefty amount to $7.75 billion versus $7.5. They also increased guidance for the full fiscal year as well, and they are seeing some meaningful improvement in, like I said, their intelligent infrastructure segments, cloud data, enterprise networking. But at the same time, they're trying to divest away from Apple, because going back to 2018, Jabil was really an Apple-centric company with almost 30% of their sales. As reported, recent quarter, it's around 18%. Now, that's not necessarily a bad thing, considering Apple is one of the largest, if not the largest, consumer electronics company. But nonetheless, they're tied together quite promisingly wise, considering the relationships are longstanding.
I saw ahead of this earnings report that BFA was out with a price target boost, 262 from 255 with a buy rating on the shares. And they were sort of talking about, if the beat and raise were to fall below investor expectations, it would still present an opportunity, as far as a buying opportunity there. Looking across what the analyst consensus is here, I mean, you've got the majority of the cohort in a buy camp. I mean, 5 with a strong buy here, 2 in a hold, and none in the underperform or sell camp. So what's behind the conviction? I mean, what are analysts actually saying about this one?
Well, I think if you consider the business in terms of growth, the company itself is not growing. They had a really good quarter, but estimates for growth right now going forward are actually in the mid-single digits, both in sales and earnings. If you look at even margins for Jabil, I was pretty surprised at gross margins for this business, because it's a very capital-intensive manufacturing printed circuit board business, are quite low margins. So they're about 8.5% on gross margins, and net income margins are around 3%. So the point is I think that if you look at the variance between the midpoint target and the high target, it's around $20, which is reflective of around 7 or 8%. Typically, if you see these high growth names, we're talking sales in the 30% range, or even earnings at around the 70% range. Just to give you some context, you see the variance between the high and the low, and even the midpoint, quite wide. So essentially, Jabil seems to be growing at a reasonable price, but it's just not a huge growth story for Jabil. It's more of a larger end market, large customer base, diversified end market business, and I think that's why it's trading the way it's trading. It's really been in a trading range in the last 3 months, not moving too much higher or lower, even though it's moving higher today based on some solid earnings. But it is, again, like I said, a well-diversified end market programmer, if you will, for manufacturing circuit boards, widely used across the board, even globally.
Hey, look, up 1.6%. We'll take it in a down market, particularly with this pullback we're seeing in technology with all these AI jitters. George, thanks so much for getting us across that name for us today and the earnings report. George Tsilis joining us there.